All right, guys, welcome to a new daily recap. Let's recap today's trade real quick. I already did it in a case study, but let's go quickly over it again. Let's see if there was anything during New York, and let's see what the other trade possibilities were this morning and this afternoon. So first of all, we know where we are. High time frame wise, it's looking very interesting now. Look at how the daily candle is forming. That doji kind of formation after taking those highs into that supply zone, taking liquidity. Monday was quite impulsive, but Tuesday seems to be a complete turnaround now. It's just doji candles, so it's not really telling us anything until it happened, but it might indicate a slowdown. And then if we go to the 4 hour, we can see that we have this bullish range now where we're in. And as internal range liquidity, supply zone, premium pricing of the red zone, above all highs. Uh, sorry, premium pricing of the red structure, in supply zone, above previous weekly highs, above previous daily highs, above Asia highs, and above the old high of that light blue structure. So sales were very valid this morning. Super high probability if you ask me. And that's why I went for the trade. And if we just go to the 1 minute and just break it down from there instantly, we can then see we have our early sellers over here. Now we have a bearish break over here as well, but it's not really strong. And if you ask me in terms of timing, it's just too far away from the trade. Then we have here Frankfurt pushes down, and as we know, if we get a push just before Frankfurt like this, we know it's most likely an inducement, especially with the instant turnaround. So therefore, we waited. Price comes above, we enter, and we can see that over here we had that break. We pushed down quite impulsively. We did tap into that discount pricing of this bullish leg, but just about. And this was really this point was the internal range liquidity. So that means that it is lower probability to move from this area instantly without taking any internal range liquidity. Now, this one would count as internal range liquidity as well, but it was just not that major. This was more like the internal range liquidity. We can see that there was a nice fair value gap over here, but we just entered without trying to extend the entry this time because it was quite, how do you say, not that large. And it's set at the 50% of the bearish range as well. It's at above that 50% premium pricing. So just took it from 1 pip reading room here. I think I just made a mistake when I did. Oh, now I understand why it's that small. I took 0.5 pip. Oh, that's luck. That's really lucky. So my stop loss or my entry should have been down there because 28, 29, 19. So it should have been here actually. Well, lucky me then. All right, so I made a mistake and it's slightly higher. It is what it is. Came down, reduce, and then we can see that we have a new structure. Let me get the marker out. So we have a high. Is that the right color? Yeah, but I want it thicker. And let's do purple. Sure. So we have this high, we have this low, we have a lower high, a lower low. Internally to this, we can see that we have a different structure going on as well. And we can see that we have a low high, then we get a low, a lower high, a lower low, bullish break, bullish continuation, early sellers, bearish break, bullish break, and then we have the bearish break, and we realign with a purple structure. And I'm gonna simplify it right now. That's horrible. Let me let me do it like this. All right, so we break above this one. So actually I saw it like this. There we go. Bearish continuation, the bullish break, bearish break, return to discount pricing, and on that continuation. All right, this is more visible, more understandable. There we go. So internally, we had a bearish break here after, and we know that as informed traders that we didn't reach into that discount pricing yet, or into premium pricing yet. So this was our early seller move on the internal range. Then we can see we came up, we get a bearish break, and you actually get a confirmation-based entry here you can take. So let me remove this again. And that's actually with a much smaller stop loss, of course, over here. And then you give one pip premium. So 8979. So you can actually leave a little bit more, but oh, it's actually quite a large stop. It's still quite a large stop. It's larger than mine. Yeah. So I thought it would be, I would take it like this. I don't know. I was looking at this and I saw it like, you could take the trade just from this area really and enter from there. And then you get your continuation. Of course, it's mitigated, but just feels natural to me. And then you can short it like that. Anyway, you got that continuation there. Then what else is there? So this is actually not a low. Yeah, so then let's remove this one because it's too much noise. There's a lot going on. So this was the internal range liquidity that had to be taken. Those were the early sellers. Early sellers taken, move to the downside over here. I reduced my stop loss because we came closer and deeper into that discount pricing. And then here we have our new low. We create equals here, quite nice. Continuation down. And we just follow along. See some form for early sellers here, but essentially we reach into premium pricing and then we break below that. And now we reached back into that. So that's right, it's clean, it's nice. And yeah, there were just continuation trades. To be fair, I wouldn't take this one here. There's a nice kind of supply zone, but I would have waited for price to like come above this. And then take that short, because then you take the internal range liquidity and get that continuation. Yeah, not much in terms of longs. I wouldn't take any longs here. Now here you could take a long because we took Asia lows, and I said for continuation we want the daily cycle to play out, so a relief during that zone during that low volume timing between London and New York, and we can actually see we came up, took internal range liquidity. Then if we go to the 5-minute, we can see that we kind of, yeah, well, not kind of, just we did reacted from this area. I'm doing this all with one hand, so that's why I'm just sketching a little bit. React from that nice area. Actually, the wick tapped into that 5-minute order block that took some internal range liquidity, not everything, because this one here was still valid. We can see that on the 5-minute there was no order block anymore, so that might be the reason that we went down. But then this one was the one that swept that liquidity essentially. Go to the 1 minute, we can mark it out as a nice supply zone. As we can see that we took out this. Okay, let's use my other hand as well. So we get that sweep, and then this will be your 1 minute supply zone. And we just tapped into that, and then we got the move. So that's very nice all, and we can see that the actual move came from the 1 minute for value gap over there. We went further down. So that's another continuation trade you can take over there. I don't take continuation trades because I'm a little bitch, no, because it's just not for me. I can't do it. I just don't have the confidence to do that. Because for me, this is where the move happens. And over here we could already turn around because there are too many other variables. Just that just doesn't work in my head. So I take continuation trades, but only with a confirmation to it. So now, like this, for instance, we create this 50-minute supply zone again. We might get a move from here. Now, what we can see is that on this kind of supportive area around this key level 110 here, where we are right now, actually below that, we just tap below that. You can see that we have this just random, random kind of a little bit random supply zone, demand zone. Well, we can see that this area itself is not random at all, because we can see how this area is kind of a support area, support and resistance area, sorry. So if we extend it, we could probably get more taps. And yeah, we can see here, it's not very accurate, but it is quite valid. Look at this, how it reacted here and here. That's quite interesting, especially this one here. So if you would just drag it a little lower, maybe make it a little bit more tiny, like this, a little bit more accurate. So just to see where it reacts from, except for that random supply zone, because if you look at the 1 hour, it's just nothing. Random demand zone. Now, if you trade most recent ranges, you have this low up to this high, and your entry comes from there, because this is your only demand zone. We don't tap into the 50% of that, therefore you got to wait for a 5-minute market shift. You gotta say though, except for well, nah, yeah. So you got some early buyers here in terms of this is your last low, but structure wise, this was your last high. Sorry, this is your last high, but structure wise, this is your last high that led to the low that caused this one to break. So really, nah, no really sellers there or early buyers there. If anything, we broke below here, therefore this was our leg, and we just reach into that just about into that premium pricing to continue further down. So then over here, this could be your 1 minute early buyers. That's more valid if you, because it's closer. Break above here, continuation down. There you get that bullish break. Then you can take your area from around here. Now this is quite tricky. I think you stay in the trade. Where you spreads, I will probably be taken out because my broker doesn't like me at all. No, I need to find a proper row, proper firm. But 30, 13, 23. To be fair, you stay in the trade. That's first of all, you stay in the trade, 3.8, 4.3. Why would you not just put it there? 5.4, 5.9, put it there. 1 to 4 still gets a hit, so that's a clean long trade. Yeah, and other than that, you can see you have some continuation again here. Not much. Now, Yeah, this was like the only thing I wanted to look into really, how we ripped it here. Other than that, I'm hoping just that we would continue further down. This will be a new previous daily high. Previous daily low will probably be here. And that would be a range for tomorrow. And ideally we get below the previous daily low, which is a New York close one, and take out hit that 10R, close 10%, and leave the rest of the trade for either these lows or just swing it a little bit further. No, I don't leave it. Just leave it for here. And then we have 1.1% plus 1.5%. That's 2.5% extra. That's sick. That's sick. Because let me get my yes, hold up. 3.96 plus 1 plus 1.5. Oh, sorry, 3.96 times 0.8 is 3.168 plus 2.5. So that's 5.668%. That's great. For this trade, we had DXY on our site. DXY looked like this. I actually did an entire markup on DXY as well on the lower time frame, which is not ideal because, as I usually say, I like to play DXY on the high time frames, like the 4 hour, etc. Just to have a general overview, but it works sometimes as well, just to give have an idea of, okay, DXY took this liquidity, it's gonna move here now, took that liquidity, now we're gonna move to the upside. We have relative equals or kind of a trend line here, so we make that, take that, then we have not much internal range liquidity, so we might take out these lows. Now we might take out these lows, which means EU go up. After we take out these lows, you can see that our first point of internal range liquidity is over here, so we might take out that high, but we also got some relative equals up here, so we might now move get a move up, move further down, take out the lows, then either have this or we move up, move down, take out the highs, something like that. But that's for tomorrow. GU didn't look at all at GU. I think there were nice longs here. Yeah, you can see continuation trades. Then further continuation trades during New York. Short wise, nothing there. We go to the 1 minute, might be something. No, not there. You got some continuation shorts here. Nice short here a little bit if you take that as a break. Other than that, not much. EU was played today. I'm not gonna go deep into GU. Higher time for wise for GU. Getting closer and closer to that area over here. And GU is not looking good for me to trade, so I'm staying away from GU. That's my daily recap, guys. Sorry, it's not that well, it was actually all right. Oh, I forgot something to do. I forgot to look at the candles. So look at these candle formations for the shorts. Let me charge my laptop. So we can see that after we came above, we created this wick. Although this was quite a good candle because it closed above, it was quite strong. Follow-up candle was not that strong. It was an inside bar. And then we get a weak bull candle and a strong bear candle that confirmed our potential move down on the 50-minute. Then 1 hour was it's looking a bit better, I would assume. Yeah, we closed below our early sellers. That's quite nice. And then this one inside bar is not that strong, but it is a full candle, let's call it like that. So it is quite decent. Then we have this candle with the huge wick to the upside and that body closure to the downside. Indecisive, doji, strong push down, and then correctional. So this might be your next target for tomorrow. That's it, guys. I'm out here. Peace out, and I won't be trading this week anymore because I did my trade. That's good. That's sick. I like it. Peace out.